main room. Today we are discussing a panel on EV demand and if it's fizzling out, focusing on policy, economics, and battery technology. So here we have Luke, Shayle, Yayoi, Steve, and also Professor Jessika Trancik. How we'll go about this is we'll have about 50 minutes of moderated content, and then we'll reserve the last 10 minutes or so for audience Q&A. If you have any burning questions, please feel free to keep them till the end, and we'll be discussing live like this. Awesome. So let's start off this conversation. Luke, you are our EV demand analyst. So given your focus on EVs at benchmark, could you start us off by giving us an overview of where we stand today in terms of EV adoption in late 2024 and how we got here?
It's a big question. So I guess a lot of people on this call will have been seeing the kind of the narratives of the demand slowdown and the kind of the headlines all around that that have been happening in kind of recent months. And I think growth has been slowing down, and it's been slowing down for the past couple of years. But I think the important distinction is that the market is still growing, so growth is slowing down, but it's not negative. So sales generally throughout 2024 up to 2024 have actually been increasing most of the year. We're just starting to see some markets start to track negative. So Europe over the past couple of months has been slightly negative. And I think the data from ASEA just came in today, and that's down about 15%. And there are, I think, different policy reasons for that we can get into later on in the call. But overall, globally, the market is growing, and most of that growth is currently underpinned by China. So China is consistently up about 35% year on year throughout the year. I think, most of the slowdown we've seen has been coming from Western markets. And I think part of the reason to do that is, there's been really challenging economic conditions for consumers, high interest rates at a time when policy has been transitioning from carrot to stick. So subsidies harder to get, less available, that kind of thing. But overall, in the long term, the policies are still there to kind of drive this transition. So, the emissions targets are still there in China, Europe, and the US. To meet them, that's going to require a significant share of BEV sales in the sales mix. And those kind of targets that currently are still stepping up through to 2035, where in Europe there's a fossil fuel ban in 2035. And then the EPA standards ramp up as well in the US. So, overall, we're at about 20% EV penetration today globally. That's what we're predicting for 2024. And we're predicting a benchmark that to rise to about just over 70% by 2040. So, the transition's still on and being driven.
Nice. Fantastic. Thanks for the insight. To follow up on that, I'm kind of curious to hear Steve's thought on the state of the EV demand today. Steve, in your piece, The Great EV Hype, you explored how inflated the expectations are and how that can distort the industry's progress. And so given the state of the current EV demand in 2024, do you believe we're witnessing a natural market correction, or is there still a deeper issue that we're not addressing with the narrative on EV adoption?
Yeah. Thanks, Michael. So when I look at the market as a total, so globally, but also China and not China, what I'm seeing is that not necessarily a slowdown or a dashing of expectations, but that the the non-Chinese world, most of the non-Chinese world, has yet to produce cars that mainstream buyers want. And so that is the problem. And so you had, in this rush in the beginning, kind of a field of dreams situation. The thinking was, you make it and then people will buy those, and that wasn't really true. So the cost isn't there and the product isn't there. In China, you had this cutthroat competition of course, the industry is subsidized, but you still have to make a car that people want to buy. And you have had BYD especially, but other manufacturers do the same thing. And so I see that's the big difference between the two markets. I think we're headed into a new phase. We are headed into a new phase. The car makers, major car makers, have understood that they need to make cars that meet the cost thresholds. In other words, the appetite, people's appetite, what they're really willing to pay, and cars that are designed and equipped in a way that's going to capture people's desires. They want to covet those cars. And come at 26, 27, 28, we're going to start seeing those cars. Let's see what they, what the Fords and GMs and Volkswagens and so on, what they come out with. That's the proving ground. Yeah, that's the way I see demand.
So if you bring up a really interesting point that there needs to be product market fit in the given markets that EVs are coming up in, especially with the compact vehicles. I know that Yayoi, in the 2024 EV outlook, it was mentioned that Japan is actually seeing a net negative year-over-year growth, partly induced because there's not a strong offering for a compact car for that market. I'm curious to hear from your perspective with BloombergNEF. Does your forecast account for the potential for market correction or the lack of fit that Steve suggests? And do you see any signals that the market might be overextended?
Yeah, and first I just want to say I 100% agree with that. Like having the right model, right price for a consumer, that's a huge factor in a decision making, especially when you're talking about like different customer segments, right? So you need a cheap vehicle for somebody who's not going to have as much cash to put in a car, and if the economy is not doing well, if interest rates are high, you're not going to be purchasing or getting big purchase items in your budget. But in terms of how to think specifically about generally like the fall or this downturn, I think Luke said it well. It's not that there is this like spiral of a downturn around EV demands. It's just that EV demand has slowed in terms of growth. It's still growing. It's growing less than expected in a lot of the markets. And the way that we look at growth at BloombergNEF, and this is me just regurgitating a lot of the work that there's a big transport group that does, but essentially the way that we look at it is twofold. One is looking at the near term, so 24 to 27. We can kind of look at the historical trends, look at what EV models there are coming and are being offered in a particular market, and then look at policy. So we can kind of infer generally the trajectory in which markets are going to move over the next 3 years based on these factors. And of course, we adjust that every year given some policy movement. So if Germany just decided that they're not going to have subsidies anymore overnight, we adjust that in next year's forecast. And then there's a factor of just compensating for future years based on that. The longer term view, that's more based on what we call fundamentals. So we look at essentially what are the prices for batteries in particular, which are the biggest factor in terms of reducing vehicle cost. And then we look at essentially the experience curve around batteries, which is something that our team does. We're kicking off our battery price survey now. For anyone on this call or in this forum who would like to participate, please let me know. But anyway, so it's essentially informed on how much battery prices are coming down, and we stack up what are the overall costs of a vehicle, and we compare like at what point, at which segments, and in which regions do we expect upfront costs for vehicles to be at parity compared to a comparable internal combustion engine vehicle. And then essentially it's a consumer adoption curve that is informed by those economics. So the end goal is essentially an expectation that if vehicles are at the same price, most customers or a lot of customers will decide to switch. And a very important factor of that is battery price.
I like that you touched on the supply side of the conversation in terms of adoption in the manufacturers. Oftentimes, as Steve mentioned, we're seeing really expensive cars being released, but not a demand for those specific types of vehicles. I want to turn the conversation on the head a little bit and look at it from the consumer perspective. Luke, from Benchmark, you guys have also often highlighted the importance of understanding consumer behavior in driving EV adoption. And from your perspective, if EV demand continues to soften, do you foresee automakers adjusting their strategies and what offerings they have? And if so, how?
Yeah, it's a good question. So I think one of the really interesting things that we've kind of been tracking this year is the rise of hybrids in China. So sales of hybrids in China are up, or plug-in hybrids, I should say, not non-plug-in hybrids. They're up about 80% year on year. Battery or pure battery electric vehicles are about 13%. And I think a lot of that is to do with now there's a lot more of a level playing field in terms of, I guess, incentives for consumers. Whereas, in some of the historic years of the market, there'd be a lot of multipliers for the kind of subsidy you could get if you had a vehicle with the largest battery or more energy density and that kind of thing. Now the kind of credits you get are a bit more of a level playing field between hybrids and pure electric vehicles. And we're starting to see, I think, a bit more of a natural reflection of what consumers want in the market. And that's why kind of hybrid sales are up. I think there's also, there's another aspect to this. So there's kind of this emerging subset of hybrids called extended range vehicles. And so they're kind of like the opposite of a conventional hybrid. So a normal plug-in hybrid, you have a larger engine and a small battery that only drives around for a small number of miles. In an extended range vehicle, you have a big battery, much more comparable to a pure electric vehicle, so sort of 40 kilowatt hours. The battery is the only thing that moves the wheels or drives the motor, and then you just have an engine there for redundancy to kind of top up the battery and only power the battery for those like really long journeys. And I think that kind of technological development extended range vehicles have been around for a long time, but this new trend for them and new models being released for them in kind of improving the appeal of hybrids and their emissions as well is another thing kind of driving that market. But in terms of like what automakers are going to do and their strategies, I think a lot of Western automakers are starting to kind of pay attention to this trend. So I mean, we've had Ford, GM, VW kind of roll back on some of their pure electric vehicle targets and say they're much more interested in hybrids now. And I think in the midterm, we'll probably start to see those automakers lean more towards those types of strategies. And, who knows? I mean, in the US, I think it's really hard to, we're talking about these kind of subsegments of the market. The large vehicles are the king in the US, and like electrifying all these huge guzzling pickup trucks, I think is a really important thing to do. So that's kind of one of the most expensive things to do because they have the largest batteries involved in the sector. So, I mean, extended range vehicles could be a way for automakers to kind of do that with a smaller battery and still meet emissions targets. So at the moment, hybrid sales, that growth is kind of regionally isolated to China, but I think, you know, the West is kind of looking at that and taking note.
The plug-in hybrids is a good point. We've seen a lot of OEMs pivot to production and development of those sorts of cars as opposed to their original EV plans. I think year-over-year growth is quite fast and quite a lot larger than, for example, battery EVs. This brings up an interesting question. Back in 2021, we saw a large growth in terms of the models that were to be offered by different OEMs in the battery EV sector. And this would perhaps lead to an overproduction of these sorts of models. Steve, I'm curious to hear your thoughts as your understanding of the landscape of the American auto industry. With this trend of increasing the amount of plug-in hybrids, do you see this potentially leading to another overproduction crisis or shift towards different vehicle segments other than battery powered? Oh, still muted.
Yep, there we go. I want to say I want to double down on what Luke said. That one of the learnings of the last 4 or 5 years is the good enough battery. That you know, a lot of talk and a lot of push for next gen, like silicon, like lithium metal, and you know, the bigger and bigger battery, and I think what we've seen is that, you know, China's success is by doubling, tripling down on the good enough battery, LFP, against graphite, and getting, you know, great performance out of this. And the and so if we sort of take that, you know, and extend the philosophy, good enough, that's the history of technology, by the way, right? That the good enough technology wins, and you know, it doesn't, every technology doesn't have to be a rocket that goes to Mars. And so that is what has won so far in batteries. I think that's what we're going to see. If you extend that to EVs, you get the EREV, you get the extended range hybrid that Luke just described. I think there's a super strong probability that that's where the market ends up. That pure EVs, at least for a long time, end up being, you know, some percentage of a niche, and the majority end up being various types of hybrids, plug-in hybrids, you know, plain hybrids, and EREVs, because you know, they satisfy, you know, a lot of what people want, right? You save gas. They answer, if your appeal is climate change, they answer some of the policy problems. They answer range anxiety, and so you know, in terms of what you asked, are we going to see overproduction? I don't see, you know, why we would. You know, I guess some manufacturers will make too many, but you know, some may make too few, but that's it. It seems like a really logical place that the market ends up.
The comparison of development of battery chemistries and new technologies versus deployment is something you brought up in your answer, and I think that's a very poignant argument of when is it good enough in terms of our battery chemistry and technology. Shayle Kann had a podcast episode recently titled "The Better Mousetrap," detailing exactly this. When do we stop building a better mousetrap, and when do we start just deploying the technology that we have in order to drive that adoption? I wanted to touch on this topic in terms of adoption curves. Jessika, in your studies on technology adoption curves, where do you see EVs currently positioned with the technology that we have today? Are we approaching a saturation point, or is there still significant room for growth?
Yeah, thanks, Michael. Can you hear me all right?
Yes, we can hear you.
Okay, great. Yeah, there's definitely room for growth. And, one comment I just wanted to make is that when we look across different technologies and the growth patterns that we've seen in solar and wind and, technologies looking further back in history, you do tend to see a period of exponential growth and then a leveling off if you approach market saturation. And we're very far from that saturation in the case of EVs. If you look at the longer term trends going back to 2010, you see exponential growth across many different markets. Some countries are further along in, sort of along that exponential growth curve, and some are a little bit earlier on. They don't have as much market adoption yet of EVs. But I do think these near-term fluctuations, or these more recent fluctuations in recent months and quarters and so forth, are important and obviously relevant to a lot of people that are watching this market very closely. But it's also important to look at those longer-term trends. And if we look at history, we do see that there are powerful forces at play that do tend to keep these trends going. And so I'm not sure that we're anywhere close to saturation in these markets. The other thing I'll say is that there is a huge opportunity. Anytime you see a big transition like this happening, there's an opportunity for companies that want to go in, take some risks, and innovate. And of course, there are companies that are doing well with their current approach, right? And the incentive for them is to change strategy if they need to do that to stay competitive and, to continue to kind of stay a leader in this space. But other than that, there's not as much incentive for them to change. And so I think what we're seeing now with some of these announcements on the part of established firms is a little bit of kind of hedging and sort of trying to see where the market's going. But there is, at the end of the day, there's a huge opportunity for companies that are going to come in and innovate, and not just in offering, vehicles at various price points, but also in charging infrastructure. That's a totally different beast, different challenges, but I think there is a lot of opportunity for innovation there as well. And then the final thing I'll say is that across many different energy services, you are seeing the benefits of using, what we see is that consumers are recognizing the benefits of using electricity. So if you can use electricity rather than gaseous and liquid fuels, there are certain benefits to that, less leaks, certain conveniences, less local air pollution from combustion processes. And so this is part of what's driving a transition in many of these energy services. There are just certain benefits to using electricity. So I think those benefits are not going to go away. But of course, in the near term, there's questions about how quickly this transition will occur across different markets. And of course, there's always uncertainty about the future.
I would expect that new technologies and those players who are making these risky technology investments will determine how steep that adoption curve is, as well as where it would level out. I'm curious to hear Shayle's perspective on this. Shayle, how do you think the current investment landscape will influence where we go next on the adoption curve and that steepness? I want to know if you think there's enough capital to push us past the barriers that we're starting to see, or any potential saturation point. Nope. seems like Shayle may not be on audio video. We'll come back to this question. Why don't we go to the next question here? Jessika, I wanted to follow through with the concept of these risky technology players in developing solutions for this space. You've written extensively for the need of more efficient battery technologies. Do you believe that the current advancements are sufficient to sustain EV performance gains, or is there a risk that we run into stagnation with the technology that we have that could lead into a further drop in consumer interest?
Yeah, that's a great question, because I think, as was already mentioned by Yayoi, the battery cost is such an important aspect, or such an important contributor to the total cost of an electric vehicle. So those battery cost trends are really important to watch. And if you look back again, taking that historical perspective, we've seen that lithium-ion battery costs have fallen by more than 95%. And that trend is continuing. There's opportunity for further improvement. We've also seen energy densities go up. And so I do expect those further improvements to continue, and that's going to continue to bring down those costs of batteries and bring down the costs of EVs. That, along with competition in the marketplace and also policy incentives driving car manufacturers to offer more lower cost, lower battery capacity vehicles alongside the higher end vehicles, I think is going to continue to open up this space and these types of technologies to more consumers. So I do think there's still a lot of room for improvement, and we will see that those continued improvement trends. We've seen exponential, I talked before about exponential growth in a lot of technologies. You also see exponential improvement over time in a lot of technologies, following different rates of improvement. But in the case of lithium-ion batteries have improved very substantially, about 10% per year in terms of that cost decline. That's comparable to the drop in costs for solar energy, solar photovoltaic modules. And so these are really two standout examples in the clean energy space. In both cases, there's room for further cost decline. That's not, the only determinant of what happens in the EV market, but it is an important one, the lithium-ion batteries. And then, of course, those drops in solar energy and wind energy costs have also allowed for EVs to be, really, as we look forward, to be sort of a way to store this very low carbon energy, also from possibly nuclear fission and other sources of clean electricity. So all of this is compatible with the push on the part of many countries and to decarbonize their energy systems and their economies.
Noted. Okay. I want to follow up on that point, Yayoi. From the chemistry perspective and technologies in general, are there any emerging technologies in the battery supply chain that could disrupt the market, and either positively or negatively in terms of sustaining this demand?
Yeah, I feel like the negative. I don't know what the negative would be, but on the positive side or interesting side, I think there's a lot of people who are dialed in, who are probably in that supply chain of interesting and positive development on the tech side. I would say, like, LFP, as Steve said, was a big disruptor already. So it's kind of like that the trajectory of how much LFP has improved, I think, has impressed a lot of people, including us. So I think that's a positive thing. It's probably going to continue to improve. So it's not just a cell to pack design, but even cell sizes. And I hear some noise in the background, but anyway, on other things that are in our radar, though, we do look at some of the technologies being developed by a lot of the people in this call. So things ranging from, like, even lower cost chemistries like sodium-ion batteries, which really got a lot of hype when lithium prices went up a lot in 2022. We started including that in our chemistry outlook out to 2035, just to have a take on how much that could take in terms of total capacity of batteries in EVs across different segments. We think there's going to be a bigger share of them in something like two-wheelers, where it can displace lead-acid batteries, compared to, say, passenger EVs, where it's probably going to start in China and with smaller vehicles. And yeah, so I think that's on one end of the spectrum. On the other side is stuff like solid-state batteries, where a lot of the companies are kind of starting to put in a bit more traction on commercialization and updating their roadmaps, I guess, over the next few years. So we'll have a report on two ends, one on battery startups, as well as more specifically focused on solid-state batteries coming up over the next couple of weeks. So I generally think disruption is a positive thing, but it's challenging to incorporate. Like, if you're anyone who's like buying or integrating new technology into a new vehicle platform, that obviously takes quite a few years, right? Not just certifying. And if you're in the development side, you obviously have that experience firsthand from manufacturing and taking years for validation. So I think it generally is a good thing, but it doesn't happen overnight, and it comes with a lot of challenges.
You made a statement about LFP surprising even BNEF on terms of its development and how quickly it's become very prevalent in the market today. I'm sure the players who were very early in the development had this narrative all along that LFP is just around the corner, and then in 2021, 2022, it became reality. I think Shayle might have solved his technical difficulties.
Right? Can you hear me?
There we go. Perfect. Glad to have you back.
Nice to be back.
Perfect. I'm interested in hearing from your perspective in the current investment landscape on what sort of technologies do you see moving the needle for EV adoption, and maybe in the battery space, but also in the infrastructure and also the ecosystem itself. This could be something from the portfolio companies, from EIP, or otherwise that you have interest in.
Yeah, it's an interesting question. I think human nature, and also the nature of early technology markets, is to swing a pendulum repeatedly too far in each direction. And so in any market that starts to gain steam, we get overexcited. We investors certainly get overexcited, but like the community in general gets overexcited. We throw a lot of money at things. Good ideas get funded, bad ideas get funded. And then it takes a while to work through all that froth, bubbles pop, et cetera. And then we swing the pendulum back in the other direction. Everything looks terrible. Nobody wants to invest in anything anymore. And then we swing back and forth and back and forth. And that's like, there's a herd mentality that's psychologically very difficult to avoid. And a big part of my job is to like try to escape the herd mentality. But the herd is the herd. And I think the reason that is relevant here is that, as you can imagine, I think we're going through one of those cycles right now when it comes particularly to battery technology, new battery technologies, which is there was a wave of investment that really, I think, peaked in maybe 2020-ish, 2021. A lot of those companies have struggled, as Steve has reported on plenty. And that has coincided with and been maybe caused a little bit by, but I actually think sort of independent in large part of the overall market growth slowdown that we've been discussing. And so, of course, investors tack entirely in the other direction, which means that right now it's actually very difficult for a new technology that's particularly any kind of a battery chemistry or anything in the lithium ion supply chain. Really difficult. It's like an order of magnitude more difficult to get that idea funded today at the early stages than it was 3-4 years ago. Now, there's still plenty of innovation going on, right? That doesn't stop early stage innovation, but what it does stop is it develops a filter earlier. More things will fail earlier than they would have previously. And you have to have a lot of faith in the early stage investment world and maybe the government funding world to believe that isn't going to result in a smaller number of things that have real potential making it to large scale. So I think that's the unfortunate outcome of our herd mentality. With that said, I think per the conversation about PHEVs and extended range vehicles and all this kind of stuff, there is an interesting question as to in this next phase, when we are going from early adopter to early majority, or whatever you want to call it, if you want to use Elon Musk's terminology, as we crest between the two waves, or whatever he called it, do we need fundamental advances from a technology perspective? Is that the bottleneck right now? Would throwing another 20 miles of range on an otherwise exactly same vehicle make the difference? Would slightly faster charging make the difference? And a lot of companies have been built off of the idea. The answer to that is yes. And I think the market has not proven that to be clearly true yet. In the long arc of history, to get to full penetration of EVs, no question, right? We need better technology. But to me, the current question of EV adoption in the, next 3 years or something like that is more a function of the models, the pricing, the markets, those kinds of things, than it is the next generation technology, which is a weird thing for me to say as a next generation technology investor, but I believe it to be true anyway.
I like those points. One thing I've been thinking about is your comments on the role of venture capital in clean tech and how patient capital is quite important. You mentioned that we swing from a very frothy market into something that's completely opposite. And it's very apparent that this year pendulum is definitely swinging this way, where it's hard to get funding. How do you think investor sentiment, either in the short term or long term range, towards the EV sector might change if this demand continues to show signs of weakening?
I think I think in the absence of the market actually shrinking, which I don't think anybody is predicting it will happen, right? The question is the pace of growth, basically. And so I think there's an extent to which the other funny thing about us dummies in the investment world is we have pretty short memories. And so the cycle will continue kind of regardless, in my mind. I mean, the market would really have to collapse for there not to be some kind of a resurgence in interest around new technologies in this space in the next 3 or 4 years. It's just the cyclical nature of this stuff. If you believe, to the first point, if you believe the market will continue to grow. If you actually think it shrinks, all bets are off. If the market continues to grow, then people are going to get excited about new technologies again. We just have to wait for the pendulum to swing.
Noted.
But your point on patient capital is an important one, right? Like the other lesson of history in battery world is that everything, and actually in many hard tech categories, but battery world is a perfect example of it, is that everything takes longer than you think it will. It's significantly longer than you think it will. And capital providers, just as everybody else, need to appreciate that, structure themselves accordingly, be prepared for that. It can be worth it in the long run, but if you're not prepared for it, then it creates painful misalignment.
As someone who works on the technical side in battery engineering and qualification, I painfully know that notion that batteries take a long time to validate and develop. Steve, from your perspective of coverage of the industry, do you see a shift in the types of investors that are entering or exiting the EV space? We touched a little bit upon VCs swinging the pendulum this way. Do you see other sorts of capital being injected into this market and into this industry? And do you have any sense of how this would affect the pace of innovation? Oh, and please unmute so we can hear you too.
Right, unmute. Okay.
There we go.
Yeah, I wanted to follow up on Shayle's remarks, and one thing is that this call is filled with battery people, and one of the things we're watching is that you guys have done a terrific job, right? The cost of batteries are rock bottom. The density is through the roof, and there are chemistries that are driving all of this in a very robust way. The big disruptor is $56 a kilowatt hour LFP out of China, and so if you've got and $60 NMC 622, so if you've got that kind of cost, what is the thing that you can bring? What is the the new technology that can come that can beat that? I think it's very hard. But things that can be worked on is twinning LFP and lithium metal, twinning LFP and silicon, which, as far as I know people who are working on LFP and lithium metal. As far as I know, I haven't heard anyone talking about LFP and silicon. Silicon brings you higher density, but that's the route to fast charge. I wanted to note that almost the whole conversation has been around innovation, which is appropriate, right? It started at policy, and that's the mistake. Policy is not going to drive this age. It has to be the technology. It has to be demand what consumers want, and the deadlines. 2030, 2035. Those are going to be pushed back. Those are not real. And so, just circling back to what your question actually was, which is who's the new money coming in. I'm not really noticing. Honestly, I'm not noticing that yet. The money that was already here is broadening into climate tech. When I see what kinds of new investments investors are making, it's in software. What can I do? What kind of website can I set up that's data driven, that will serve some purpose, solve some problem that existing companies are having, whether it's manufacturing, scale up, materials discovery, tweaking the chemistry that I have. I think the key thing is something that Shayle said, and that's the pendulum. And we're at that point, where the pendulum. I'm not sure it's swinging yet. The other way. We're hoping for that. Waiting for that, and then watching where that ends up.
I have a lot of questions about the sustainability of LFP prices and just the supply in general. But in the interest of time, I know we're close to our Q&A section for the audience. I want to close out the panel by asking all the panelists the same question. Please feel free to give whatever answer suits you. I wanted to ask everyone, given the current state of the industry, what major shift or innovation do you think will either break or make the EV demand over the next decade? How about let's have Luke close us out first?
Yeah, kind of on theme with what's just been said, but I think allowing, Chinese LFP models to, participate in markets in Europe or the US and help kind of solve this cost problem and price sensitivity problem that consumers have is super important for taking the market to the next level, in my view. And at this point, almost all the LFP is made in China, and local supply of LFP can't really be done up to 2030 in Europe and the US.
Awesome, thank you. Jessika?
Yeah, thanks. I just want to highlight the role of policy. We've seen examples in the past where policy has been really successful actually at stimulating innovation. So if policy is done right, especially market expansion policies, what you see is a bit of government funding and then a larger amount of private sector funding. And given the important role of EVs in supporting climate change mitigation, government policy is very relevant. And then the other consideration for policy is to, make sure that those public dollars that are being spent lead to equitable benefits. And in that area, policy has a really important role to play in nudging markets toward lower cost EV models, and also nudging markets toward expanding charging infrastructure where it wouldn't otherwise be expanded to serve populations that wouldn't otherwise be served. And then also nudging markets to install chargers where they'll be used at certain times of the day so that they'll be beneficial for the grid. And so policy can really work in concert with the private sector to accelerate innovation, make this transition beneficial. And I think given the costs of climate change and the externalities, there's a really strong argument for that. And then also, I think over time, policy that's in the near to medium term, but over time, there is just a huge opportunity for innovation in this space. And this transition opens up that opportunity for companies, especially that are willing to take some risks. There's an upside risk, and there's also those downside risks, but those can be balanced out. And so I do expect that we'll continue to see a lot of innovation in this space.
Thank you. Steve?
Well, so I just want to add on, because I think, a lot of smart things have already been said that are true. One thing that Jessika just said is how do we get, or how does it happen that the non-Chinese world, so the West and also South Korea and also Japan, are willing to take risks again? One of our big problems in getting this industry going is that our entrepreneurs, apart from Elon Musk and probably a few others, are just not risk takers. They're just not prepared to go all the way that Chinese companies have been. And so that's one thing. And the second thing, I think that's key. That's a key thing. And the second thing is simply our car makers producing the cars that people want. Just, I already said that, but I really think that's key. So you guys, the battery guys, can make the best chemistry possible with the fastest charge and the greatest range. But if the car makers making highly desirable vehicles that meet the cost targets, that has to happen, so those batteries go into something.
I agree fully. Thank you. Yayoi?
It becomes harder when you're like further down the list, because people are getting some good ones. I took note of like emerging markets. We didn't talk as much about India, Brazil, Thailand. These are markets that kind of came up as surprising, and they're huge. India in particular, huge market. And obviously there's like other vehicle segments like I guess commercial EVs, 2-3-wheelers, and those segments that are growing rapidly. So I'll just leave with, I think that once emerging markets really start gaining some traction, we're going to see like those numbers picking up from where we see slack in the US and Europe. So,
And Shayle, please close us out.
The hardest job. I guess I'll talk about something I think that the EV world does not talk about enough, and that I do think is going to have a bearing on the rate of adoption of EVs over the longer term, which is the price of electricity. Is actually something that I think is deserves a lot more attention than it is getting, because certainly in many markets, definitely in the United States, there is a lot of upward pressure on electricity prices. And that upward pressure oftentimes is coming in the markets that see the most EV adoption. I live in California. Electricity prices in PG&E territory are absolutely insane by historical standards right now, and this is the region of the country that has seen the highest EV adoption. I think that's going to be true all over the country for a variety of reasons we don't need to get into right now. But one of the things that concerns me is that the economic value proposition of an EV. We need lower cost models, sure, but the savings you get, the operating savings you get from an EV, is a function of the relationship between the electricity price and the price of oil, and that is a relationship that you don't want to turn in the wrong direction if you're aiming for more EV adoption. So one thing I think that the broader EV and battery community needs to be really focused on is how do I lower the cost of electricity as a fundamental underpinning of the value proposition of EVs.
The energy gauntlet has arrived. That is the main message, right?
Indeed.
Perfect. Well, that concludes our moderated session. I've turned confetti on for everyone very briefly in the setting, so please go ahead and give a warm confetti applause for everyone. Thank you so much for the speakers for your insights. This is a fantastic panel. We're going to open up the floor just a little bit for the audience to ask questions. Please feel free to join the audio and video. We'll be taking questions in this format. So if you asked a question in the chat, please go ahead and we can start discussing live in the remaining time that we have. So who would like to start?
Here.
Jake, please.
Steve, do you think that the expansion of the EV market is really a function of the OEMs trying to see what shakes out in terms of anode cathode combinations before they make major considerations, before they make major decisions on those? Lithium versus silicon versus 811 versus et cetera, et cetera, et cetera. Are they waiting for a shakeout?
I do think that they have been they've been run headlong into LFP, right? They made these big bets on NMC. Everyone made a big bet on NMC, and then understood late that that was a problematic bet. It's good for some of the cars, but I think generally speaking that the chemistries are there, and I don't think that that's an obstacle. That's not a major obstacle to what's next in terms of their being able to succeed.
Sorry, can I ask a quick question? Might be controversial, not sure, but I've been reading. Actually, there was an article recently where it said that the batteries, after testing, I don't know how many thousands of vehicles, the batteries are outlasting the vehicle itself. And then there's been, I mean, there's always chatter in on LinkedIn, whatever, around the range and range anxiety, and this is, there's empirical evidence, and then there's studies that say that people don't drive 400 miles in one go. So any thoughts around, are the batteries either over engineered? Are we over engineering the EVs by just putting too much capacity? Any thoughts around that? And because the way I see it, that ties directly into the affordability of vehicles.
Maybe I can take this one. But yeah, I mean, I think there's quite a lot of studies that show like the majority of trips driven, or like something like 80-90% of trips driven in the US are like 30 miles or 40 miles or less. So I think, yeah, range anxiety is something that, maybe is being pandered to a bit too much. But, I speak, if you just speak to like friends and family about reasons why they do or don't buy an EV, people always tell me two things. It's either price is too high or the range isn't enough. So I think, people who don't know the industry or follow the kind of the trends in and out like the analysts do. That range anxiety is a real thing, and I think range does sell EVs. So it's still going to be quite an important consideration. But I do think there are some other non-battery ways to kind of tackle that. One is moving to 800-volt platforms and wide bandgap power electronics, just making powertrains more efficient without the battery. So yeah, I think there are ways to do that without necessarily increasing battery size and cost of the vehicle.
I guess just one thing to add to that is like there's this inverse relationship between range anxiety and generally like charging infrastructure. So if you know you can charge it with a certain, like within 100 miles or 50 miles, then your road trip where you're going to need more range is just going to be a lot more comfortable. So so I think that is really important as well.
I think hello everyone, can you guys hear me?
Yes.
Hi everyone, my name is Thomas, and I am the CEO of a company called Electric Matrix, and we are sort of like building on the battery testing equipment. And I think my question is very suitable to piggyback what Yayoi was saying, that about the charging infrastructure. Because according to the data right now, if you're looking at the Chinese market, the ratio between the charging stand versus the vehicle that running on the street is around 1:4/5, and also in the EU right now the ratio is around 1:7/8, and the US is 1:15. And I'm trying to ask the panel, what do you think is the fundamental issue of why people are not building enough charging infrastructures? What is the hurdle right now?
I can add a couple of points, but Jessika, you want to?
No, that's fine. I mean, I think that it's a mix of factors. So you have some car companies that are, happy providing higher end EVs. These tend to go to households that have an opportunity for, off-street parking and can install chargers at home. They also have second vehicles, and, on 95% of days, they'll be able to drive their EV, but when they travel longer range, they will take their second vehicle. And that's kind of a nice balance for a lot of these companies. So there just isn't that incentive. Now you are seeing that start to change as there are companies offering electric vehicles at lower price points, and also in policy incentives for that, and also policy incentives for charging infrastructure expansion. So as the market expands, you see that incentive growing, but there's it's a little bit of a chicken and egg problem in many markets. So you need that policy nudge to get charging infrastructure to really expand. In some markets where you have, the situation's a little bit different across different markets. You have, in some places, you have more lower price point EVs being offered. And that's because you have lower car ownership in the population. So anyway, it's quite a complicated story, but I think slowly things are catching up, and policy can be really effective for nudging, further investment in this area.
Fantastic. We're at time right now, so thank you once again for the panelists for joining us. Thank you everyone for attending. For the panelists who are able to stay a little bit after for additional questions, we'll be opening up the floor once more after the announcements. So please feel free to come back to the session.